how much typically on an average a fund manager should expect to make?
You're recording this conversation and you're going to put me in trouble. But if you ever want to do VC investing or like FFF investing, then learn to say no first.
Life is a full circle, right? IIT comes back.
Yeah. Life is a full circle. Something I really wanted to be a bus conductor at one point in time.
But did you just say bus conductor?
I did. I actually did.
Hi, good afternoon, sir.
Yes. Don't call me sir.
Okay, I'll try not to. How's it going?
Good. I'm very excited. Thank you so much for inviting me.
Oh, thank you for doing this. We're happy to have you. And I know how precious your time is, right? So getting 1 hour out of your schedule is not an easy thing to do.
No, my pleasure. Happy to be of any help.
Fantastic. And how was the Holi, by the way, yesterday? Were you playing?
I have not played. Unfortunately, I've not played Holi since like school days now. So I saw that like you have color on your hands still, right? Kind of jealous, definitely. But I think next Holi definitely I'll try to sort of make a plan with friends. Fantastic.
All right. So good evening to everyone. Very happy to have you here. This is beginning of a new series we're doing at FinTree. It's called Coffee, Careers and More. The concept is very simple. In the last 10, 11 years, we've come across, I've personally come across a lot of candidates who would come to me and say, Utkarsh, investment banker banna hai. I want to be an investment banker. I think that Hindi movie has a lot to do with it. Hrithik Roshan wala.
Zindagi Na Milegi Dobara.
Yeah. So a lot of people have, some ideas. They'll come to me, they'll say, I want to do this, I want to do that. Then we start talking and, I ask them a little bit more in terms of, which area, what do you think, how it's going to be? And then I realized that the knowledge is very superficial.
Yeah.
So what we wanted to do is we're teaching people, CFA, we're teaching people FRM, they're learning the concept. But we also want them to know a little bit about how the life is going to be once they're on the other side.
Yeah.
So other side is you, right? So how the life will be when you're a VC fund manager or when you're managing family offices. So that's the whole reason why we're doing this series. So today we are exploring the VC world in India, which is a very fascinating space. Honestly, I do not myself have a very strong understanding of the entire ecosystem, and we hope that we learn a lot more about it today with you.
I hope I can live up to the expectation.
Fantastic. All right. So let's get started then. We want to know, what are you doing these days? Like, what does your work involve? How is your life these days?
Fundamentally, I'm a fund manager, and I manage funds for like a prominent HNI personality out of India. Let's sort of just leave it at that. And manage the entire portfolio split across listed, unlisted, and fixed income. We've been very, very active investors in the unlisted space. So now I have a portfolio of about 12 companies. So to answer your question directly, a lot of my time sort of goes into the portfolio management part of it right now. Since I joined, I made quite a few investments in a much fast-paced kind of a way versus a typical VC fund, which will generally sort of not make that many investments. So since I joined, within 6 months, I made like 8 investments. So more now in the consolidation phase, doing more portfolio management, participating in as many board meetings, at least the ones where I get invited, trying to help entrepreneurs in the way, in whatever little ways I can.
So audience profile today is mixed, right? There's a big chunk of them are CFA, FRM candidates of FinTree, but we have mixed profile as well. I want you to simplify this a little bit for us, right? So when you say that I've invested in unlisted space, so can you give us a couple of examples if you're allowed to use the names? And what do you look at a company when you're investing in unlisted space? What characteristics do you look at? At what stage of the company do you invest at?
Yeah, no, absolutely. I can take names. So I think, let me try to pick the name which perhaps would be most popular. I think Epigamia is a company which many would have perhaps heard of.
Yes.
What I mean by unlisted is Epicame is a private limited company, which is not listed on any stock exchange. The shares of the company are privately held with a select sort of set of shareholders and of course the co-founders and set of investors. So when you invest in a company which is not listed on any of the exchanges, essentially we call this like unlisted investment or venture capital investment. In terms of the second part of the question, what I look for while investing, I think that's like a longer answer.
So like I don't want very specifics, but maybe generic answer, 2 or 3 quick pointers that people can think of. So let's say you're looking at a food and beverage company maybe, or FMCG company. What stage of the company do you look for? And what typical characteristics do you like? Is profitability a criterion for you when you make investments?
Yeah. So let me first take a step back for the benefit of the audience here and sort of just quickly explain in 2 minutes what are the different sequences or different stages of venture capital investing, right?
Sure.
So when you invest in a company which is very, very early or almost at an idea stage, there is an idea that a bunch of people have come together, perhaps started a company. In many cases, they've not even started a company. They just have like an investment deck or a PowerPoint presentation about what they want to do. And if you invest in a company which is that stage or idea stage is what we call angel investing. People, the nomenclature sort of is a bit fluid. Everyone has their own sort of nomenclature, but it's also sometimes synonymous with what we call seed investing. Right. So very early stage, which is business either at idea stage or just about started, is seed investing. And then, as you go forward, the first stage after seed investing is called Series A investing. And then it just goes on in alphabetical order, right? Just to give you some flavor of a Series A kind of a company. Generally a Series A company, if it's a consumer, i.e. it's a non-tech kind of a company, most likely it would have launched its business. It would have started earning revenue. In many cases, it would have demonstrated some, in common parlance, a proof of concept, meaning there is actually a product, 1 or 2 products that they've actually either launched on e-commerce or offline, and they're actually generating some sales out of it, right? So that's probably like seed, angel seed, Series A. People nowadays call pre-Series A. That's something in between a seed round and a Series A round, right? So all of them combined is what we call early stage investing. And then Series A onwards is when generally most companies would have, demonstrated some initial level of traction, what in technical parlance we call product market fit. And after that, there is serious rounds of funding that happens, right? So the Series B, Series C, Series D, and thereon are all very serious rounds of funding. The evaluation criteria of those kind of companies or those kind of stages of companies which are at those stages is a slightly bit different from early stage kind of evaluation criteria, right? As far as where we invest across the spectrum, right? So I've participated in seed rounds, and as I said, like when there was very high conviction, almost invested in companies which were at a PowerPoint stage. 2 companies which are even pre-IPO, so maybe equivalent to like Series C or Series F kind of a stage. So across the spectrum, and largely in consumer and consumer tech is sort of the 2 areas.
That's the area of
like what we say is our thesis or trust.
Understood. I think you've also invested in one of the ed techs, right? A hobby, Front Row.
Yes.
Is that correct? Yes. Was that your brainchild?
Yes, very much. I mean, the company wasn't my brainchild. The investment.
The investment.
Was, clearly
absolutely.
My brainchild. A fantastic set of founders, and that is the company I was saying. I invested in Ishan and Nikhil. When they were very early, they were pre-launch. All they had at that point in time was just some Facebook community where they were testing a few ideas out. They did not even have like a working app when I invested in them. And areas where you understand the industry in and out, you can take some of these kind of risky bets because with Front Row, what happened is I had a I've done some work in EdTech in the past, and everything that they were saying in the initial conversation was just like tick in the checkbox. So it's one of the companies where I said yes in terms of investing within a week.
So Jigar, I have a question. So what I've listened and learned from very few people I know in the VC space is that if you're at an angel seed stage type of an investor, the investment is a much more fun because it's the work is much more fun because you're learning businesses and you're validating ideas and evaluating promoters. So it's a lot more qualitative and less quantitative. But the moment you go in the later growth capital and you go into maybe Series B, Series C, then it's a little more number crunching and less of qualitative. Is that the correct way to look at it?
The straight answer is yes. But it's a bit nuanced, right? Like I think it depends from company to company and sector to sector. I've seen some of the tech companies, even at a Series C, Series B kind of stage, not have enough traction or enough financials actually for anybody to evaluate, right? So their way of traction is more like user acquisition and some value addition to the user. They may not even generate any revenue. So there may not be significant meat in the financial statements of those companies yet. Those companies still will be raising very serious rounds of funding. But if it's a consumer, which is more like non-tech consumer, then clearly, yes, I would say absolutely. Like I think Series A onwards is when it becomes more quantitative analysis rather than qualitative. There is, it's still probably most of these companies will be loss making and definitely not generating cash. So they'll be burning cash. So the way one or two multiples that we use is a revenue multiple. I personally like to see revenue to cash deployed kind of a multiple because I always like to see how good the entrepreneur is in terms of capital deployment.
All right. So I want to take a step back now. Not make this session very technical. We'll keep it light and easy. So you're a VC fund manager, which is a dream for a large chunk of people who think of finance as their career. So I want to know, what were you like a child? Like, was that clear to everyone that Jigar looks like a VC fund manager type of material? How were you in college? Tell us a little bit about you being a kid.
So being a kid, no way. I think my career preferences, and I'm not trying to pass a movie dialogue or something. I really wanted to be a bus conductor at one point in time.
But did you just say bus conductor?
I did. I actually did. And you said as a kid, right? So I think there's something very fascinating about that. The box.
The ticket box, the aluminum ticket box. Yeah, that's really cool. Right? Yes.
So I found it very fascinating. I found the numbers on a ticket very fascinating, and how he just knew which one to punch in terms of the stock, etc. Right?
That's a skill, yes. And he remembers kisne ticket kharida hai, kaun baki hai. He remembers all that stuff.
And he is able to balance himself
Correct, yes.
No, but like on a serious note, I think my passion, if that's also a question, really developed when post undergrad and when I went to B school, and that was really the first time I actually learned that there is a concept called as venture investing, wherein investors invest in a private company. And honestly, like that just expanded my imagination, and I instantly fell in love with it. I'll admit at that point in time, I did not know what venture investing means. But just the idea of investing in a private company just really fascinated me. And I think for me, my fate was sort of sealed at that point in time and kind of really built on that.
No, but see, the thing is that happens to a lot of people. I must confess, I wanted to be in private equity at some stage in my life. Okay, and I spoke to a few people, and so I was a little jugadu even during my internship times. Like I was doing my CA internship, so I wanted to be in PE space. People told me that the only way to get into PE is to network. So I used to network all over the place, right? Go this conference, that conference, because I thought that's what I'm going to do.
Yeah.
Now, there was a guy, and he promised me, he was like, you finish your CA and you give me a call and you have a job ready with me. And I was like, you know what, life's sorted now. And then I finished my CA, which was year 2009, early 2009. And by 2009, markets had changed, right? Because 2008 was something else. So suddenly the flavor of the industry was different. And then I realized getting a job in that space was extremely difficult. So my question is that there are a lot of people who dream, like I'm sure a lot of B school people think कि मैं भी VC fund manager बनूंगा. But thinking there and reaching there, there is some magic that has happened in between. I want to know what's that formula for you.
So there is a happy part and there's a sad part to the story, right? So let me start with the sad part so we get that kind of out of the way. The sad part is that it took me 8 years to break into VC. It took me 8 years, I repeat myself, to break into VC, right? So
wow. 8 years, okay.
It's a long time. And the happy part is, I made fund manager at 34, which probably I think very few fund managers around at 34, right? So
probably the youngest I've heard of.
Yeah, I mean, at least in that top quartile in terms of the age, right? Yeah. So is your question around how I broke into VC, or is your
so let's do it chronologically, right? So okay, so let me ask you a little more pointed question, so maybe audience will benefit more. So your graduation from which college?
I did undergrads from a college called KC College in Bombay.
Okay, so it's not IIT.
It's not
that's
IIT.
Fine. If it's not IIT, so that's a great news, right? So a lot of us who worried IIT nahi hai, to life over it, that's not happening. Okay. Yeah. How about your postgrad MBA? Was it an IIM?
It wasn't.
Yeah, fantastic. I'm so happy. Yeah. Good. Yeah. All right. And then after that, what was your first job? Did you get a job right out of your campus?
I did get a job. I did not end up taking it. I got a job with the Big Four. I did not end up taking it, but I actually started my own company right after undergrad.
Okay.
So I became basically the start to my professional career was as an entrepreneur. So that's how I really started my career.
Right. And what was that business about?
The business was about college apparel and merchandise. So in the US, if you see that just printed T-shirts, bags like Harvard, Stanford, those kind of things. So that insignia merchandising per se, especially in the college space, at that point in talking 2007, was like a $2 billion industry in the US. And in India, that was completely missing. Even the top tier IITs and IIMs did not have merchandising from a very retailing kind of a way. So of course, people used to make T-shirts and stuff from events perspective, but generally those merchandise used to be just it was just a very short-term use and they used to throw it away.
Yeah.
So that was really my idea, and the three of us, including me, started that off. I had a portfolio of 10 colleges actually in Bombay that I was servicing in a cash.
So is it still running?
No, it's not. I paused it in 2009-10 crisis. That's when one of the co-founders left. Other co-founder, we didn't get along.
But I think your entrepreneurship experience must have helped a lot, right, in evaluating businesses going forward. So what happens after that?
I did consulting, investment banking for some time, and more sort of. So here's the thing, right? Graduated from KC, went to SP Jain. It was more like an entrepreneurial management kind of a program that I did, and I was running my startup in the backdrop. SP Jain is where I really learned about the whole concept of venture capital, and that just stuck with me. So right after I paused my business, I think roughly 2010, my first attempt was to break into the VC industry, and that's the funny story, right? So I did manage to get an interview from one of the, I think at that point in time, the best VC fund, both by size and by reputation, size of the fund and by reputation. I think I would assume there were some hundreds of candidates who applied, and I made it to the top 2, multiple rounds of interviews. And in the final round of interview, I was rejected. And of course, it hurt me a lot. And I just couldn't take no for an answer. So I figured a way out to speak to the fund manager, the main person in the fund, saying that what happened, I killed it on the assignment. We had a great conversation. You loved all my ideas, etc. Why did you why was I rejected? All the interviews went really well and I enjoyed all the conversation. And you'll be surprised with the answer. I'm of course not going to take names, but the answer was that the other person, the 2 finalists, went to an IIT. right?
Okay. So life is a full circle, right? IIT comes back. Yeah.
Life is a full circle. I think, I was really, really disappointed. I kind of found it to be very unfair. And the reason I'm saying this is not to sort of seek sympathy. The reason I'm saying this is to sort of motivate whoever wants to become a VC that it doesn't matter, right? Like, it's okay. Some funds have a certain myopic kind of a way of hiring, and they have certain filters in terms of shortlisting candidates or selecting candidates eventually, right? But I think what's important is to be clear as to what you want in life. And in my case, thankfully, I had that clarity that I want to do VC. I was just extremely determined, right? So every single step to your question that I took right after that was like, the question I asked myself was, if I take this, will it help increase my chances to break into VC?
Wow.
So it took me a long time, I'll admit, but like, I did eventually manage to crack that.
Wow, that's an interesting way of looking at this. If I do this, will it help me eventually reach my end goal?
Yeah.
But that's the thing, right? So I think you had amazing clarity of thought being a kid, and maybe that helped tremendously. Because generally, a lot of people will have confusion in terms of what they want to do. But in your case, it was clear कि VC ही बनना है, right? That was the game. Okay, interesting. And then when was the big break? So how did it all happen? Which year?
So you asked me a question, right? Like, so I think from 2010, everyone who knew me sort of knew that I wanted to become a VC, right? So like, every single client I've worked, or every single company I've worked, including all my bosses, everybody knew Jigar wants to do VC in his life, right? And a couple of my bosses, even like in a very informal, funny, light-hearted kind of a way, used to even get frustrated with me, saying that VC banna hai to idhar kyun aaya, kind of a thing, But since everyone knew that I wanted to become VC, like, everyone used to try to give me like either references or introductions to their friends who were in the VC community. And I think the big break happened in 2018 when one of my clients, she went to Wharton, and she connected me to her friend who was setting up a VC fund called Transit Capital, who's also like my former boss, who's also ex-Wharton. Who's also graduated from Wharton. So that's the connect. And she made the introduction. Again, like a very long drawn, tough shortlisting process. I think, of course, once I got into the firm, I came to know that there were, I think, about 540 applicants, and of that, he was hiring a VP. So I somehow managed to make it.
So you started working around 2010. So the first VC break happened in 2018. Is that right?
That's correct.
8 years. That's your 8 years.
That's my 8 years. Yeah.
And the entire 8 years, you had VC on your mind.
Entire 8 years, I had VC on my mind. Everyone around me knew I wanted to become VC, right? Like, it was just that clear. And I think, again, like, I think the point here is, you need that clarity, and you need that persistence, and you need that determination to break into VC, right? Otherwise, like, of course, like, some people do get lucky early on, right? Like, they go to top schools, they are like top of the class in their undergrad. They get into the McKinsey, Bain, Boston Consulting Group. They do very well in those firms, really outstanding, and like top, like either BCG calls it top of class, Bain will call it like exceed expectation in every single assignment or cases that they work on. And then they get noticed, and they somehow sort of break into VC as an analyst, right? But the important thing to know is, just breaking into VC is also not the end game, right? The end game is to actually become partner, and the journey from an analyst to a partner also is quite difficult, right? So I think the secret formula, if there is one, is just like persistence and determination, and that clarity of thought.
Do you have like a hidden tattoo on your body somewhere which says VC that you see every day?
I think that's the only thing that I missed out on.
So 2018 Transit Capital, that went on for how many years?
It went on for 2 years. And I think we were raising fund 2. We just about, fund 1 was fully deployed, and we were raising fund 2. And that's when COVID hit. And transit was a cross-border thesis. Just to simplify that, we invest in companies which were based outside India, usually in the European or the US region. And in COVID, even domestic funds were finding it difficult to raise money, correct, right? So there was no way a cross-border fund would have succeeded in raising money. This is literally the first wave of COVID, the first lockdown. And that's when I kind of had a heart-to-heart with my boss and said, like, this is not going to go anywhere. COVID's here to stay. What are we doing, right? Fund one's fully deployed. What are we going to do? And that's when I moved out of transit.
Right. And what do you do these days?
Yeah, I mean, thankfully, the place where I'm working, Car Enterprises, is where there was an opening. Again, like a very long drawn kind of a process. But thankfully, this time the number of applicants weren't that many. Just the interview process was very long drawn. I think in all, I would say about 10 rounds of conversation. Right. So then I moved on to Car Enterprises, where it was more a fund manager role. And that is what I found very exciting. Okay.
So here's an interesting question. Okay. And I'm sure, see, a lot of people who are listening to us today, they're not IIT IIMs, but they're smart people, right? And I fundamentally believe everyone is smart and capable enough to do whatever they want. You spoke about passion, you spoke about persistence. But I think one of the also very important leg in the success is a direction.
Yeah.
So you were maybe in Mumbai, or maybe you found it on your own, but we want to now learn it from you. In terms of what should I do? So I'm a 21-year-old kid. I've graduated, let's say, from KC or maybe Symbiosis. And maybe signed up for CFA, maybe doing a level or two. Have a little bit of skills. I've seen Shark Tank. I'm, over enthusiastic. I'm completely pumped. I think VC is what I want to do in my life. What should I do now? Like, what skill set should I acquire? How should I apply? What kind of firms? What's the landscape?
Yeah, a couple of routes. I mean, the first criteria is you're not IIM or you're not like top tier schools, right? That's what we're talking about. I think if you're not top tier schools or top tier sort of consulting firms or investment banks, I think the best way to get the attention or get some attention in the VC ecosystem is to either do your own startup or work in a VC funded startup, right? If you are going to eventually invest in startups, you need to be part of the startup ecosystem. You need to know the startup ecosystem in and out. Right, and you need to be present there for you to be noticed or for you to make the right connects and right sort of introductions, right? So like if you're still sort of, if somebody wants to become an investor, they are probably little more risk averse than an entrepreneur, right? So probably in that case, working in a startup in a, let's say, a founder's office role, or working as closely as possible to the co-founder or the founder of the company would be the best sort of way to increase your chances of getting their attention in the VC company.
So you're saying either do your own startup, but that, I mean, I believe you should do a startup if you feel that there is a gap. Like I always tell people, don't do a startup just for the sake of it, right?
Absolutely.
And definitely not because you want to get into a VC fund at some stage.
Definitely not. You're most likely going to fail.
Yeah. But I think work with a VC funded startup seems like a fantastic idea. But do you think so? To become to improve your chances of getting into a VC fund, do you need more of functional expertise in terms of take a domain, maybe let's say tech, and be a champion of that? Or do you think it requires a more generous, holistic skills where you know a little bit of everything?
I think knowing a little bit of, and this is, I don't think there is a clear definition or a thumb rule around this, but I think I can at least talk about what worked for me and what my experience and observations have been. I think these days, knowing everything is more helpful than just knowing one thing, right? Because you can always buy that talent which just knows everything, but that knowing everything and that general manager or a general management skill set is very tough to get these days, right? So I think that is valued more across industries, not just in startups, not just in VC, even if you go in mainstream large companies, I think that is something that is valued more these days, right? So try to pick up those. I'm assuming the audience here already has the technical finance knowledge. If I were to pick one word that makes you successful in the startup ecosystem, that word is execution. The corollary to that, or like a side or like an adjoining point to that, is if you execute in whatever capacity that you work in a company, right? And if you make yourself, like if you make that impact, and in a manner of speaking, make yourself indispensable, is definitely when you're going to be noticed, one within the company and also eventually outside the company, right? So that's really the way to think about it, that whatever you do, you make sure that you make an impact, and especially if you make an impact in a startup which is VC funded, 110% you'll be noticed.
Right. So this is, see, I never thought of it this way, by the way. Like, so I'll tell you what I have been doing. So we have this placement thing at FinTree, right? And my dream is to basically produce 100 fund managers in the country, whether it's equity, whether it's VC, So we keep on talking to different VC funds. We just do cold calling, right? Or at least do connects, or I call up those guys and I tell them, see, this is what we're doing. And we have some really smart kids and give us a chance. But we never really thought of this backdoor entryway where you actually work with a startup for a few years, which is a fantastic idea. So
also, like, you can pick up, like, so if you want to do investing, right? So I'm assuming this audience is more like they finished undergrad and they've just finished their masters or just about finishing masters, right? So even if, let's say, they work in a startup for 1 or 2 years, they'll break into VC at an analyst or at max an associate level, right? So as an analyst and associate, what are the skill sets you're supposed to have? You're supposed to have hardcore analytical skills. You're supposed to have great networking skills, and you're supposed to have like and networking / people skill, right? So because like as an analyst, you'll do two things fundamentally in a VC firm, right? You'll do a lot of deal sourcing, which requires a lot of networking, right? And you'll do a lot of research, like secondary desktop research, building investment memos, trying to do comparison between companies and like why this company is better, understanding business models, those kind of things. So very hardcore research kind of job, right? And in order for you to demonstrate that, if I step back now, your role in a startup also, you can pick, if you have the opportunity, to pick a more what we call a founder's office role, where you are helping the founder on the strategy, or you're helping the founder as a business analyst, right? Saying that, hey, I'll help you. I'll be the guy who makes an MIS for investors, right? Let me make that first draft for you of the investment note that you send to your investors on a monthly basis, right? Let me at least, like, once you build a relationship with the founder of the company, you can perhaps request, and let me at least just participate in a call with an investor and just observe as a silent observer, right? So those are small ways where you get yourself closer
exposed
to the investment community, right? Versus, let's say, you pick up pure logistics and ops role, you perhaps will not have those exposure, and you not be relevant in that sense from a VC perspective.
Okay. So what's the typical journey like? You start as an analyst and associate, take a mid-size VC fund. You start as an analyst and associate. Typically, people spend how many years here?
So, I mean, it's if you start as an analyst, if it's a mid-sized VC firm, most likely it's a pre-MBA analyst, right? So they'll work with the firm for about 2 years. Most of these guys, after 2 years, branch out in 2 ways. Actually, in 3 ways, right? One is, if it's a pre-MBA role, most of them actually go about and pursue their MBA or whatever master's degree that they want to pursue. Generally, I've seen VC analysts will go for an MBA. The second sort of a branch out is they go out and start something on their own, because in 2 years you get exposed to so many companies, and your understanding of the overall landscape is so much sharper that you actually know what are the pain points, to your point, right? Like, you know what are the gaps, you know what are the white spaces, you know what truly is a pain point. And then if you feel like, hey, I can actually execute this,
do this,
they just start on their own, right? And the third is, you basically do something else. Like you realize that you're just not fit for this, and You either go in mainstream and start working in like larger companies, or go work in a startup or something like that.
Okay. So analyst or associate is typically what you get in as a pre-MBA is what you're saying.
Most likely analyst. Yeah. Yeah.
So
and
typically 1-2 year of experience. Kids.
1-2 year of
freshers.
undergrad or postmaster's experience. Yes. Yes.
And what kind of pays are we looking at in a mid-sized firm in Mumbai?
Mid-sized firm, analyst.
Average. Like, we'll not hold it against you.
Don't hold me to this, but like I would say anywhere like the fixed will be anywhere from 15 lakhs to 25 lakhs. Depends on how big the fund is and like if they have the money to pay.
That's pretty good.
Yeah.
For at an analyst level, 15 to 25 for someone with 1 or 2 years of experience is pretty good.
Yeah, yeah. If it's a mid-sized firm, they'll pay you that much. Yeah.
And then what happens? So you work, let's say analyst as a few years. Let's say you decide to stay in the same space. What do you become next after being an analyst or associate?
So that's the tough part, right? Like growing within the VC ecosystem is very, very tough. So getting promotions is very, very difficult, right? So the
government job jaisa nahi hai. No promotion every 5 years. No. Okay.
It just doesn't work like that, right? Like I know of again, I won't quote, I won't say the name, but like friends of mine who've been like in a VC firm for 10 years, but there were guys who worked for 7 years but made partner, but the friend who stayed for 10 years still hasn't made partner, right? And I think it's more to do with the kind of deals you bring to the table, like what kind of eventually exits and returns you are able to generate for the fund, right? So
and success of the fund as well.
Success for the fund
matter.
Well, right?
So you're saying, sorry, I'm cutting you in between, but I thought this is important. You're saying that your deal sourcing skills are valued the most in a VC setup. So if I'm able to source a lot of deals, will that be considered as my success metric in a VC setup?
At an early stage, yes. There are basically 4 parts to what a VC does, right? The first part is deal sourcing, right? The second part is what I call like in actual investing, and why I'm calling this as a step is because that itself is like very, very, it requires a lot of hard work and it's painful, right? And especially these days when quality, the supply of quality entrepreneurs so less, there's so many VC
and
funds.
So much of money,
So convincing entrepreneur to take your money is also a challenge, right?
Right.
A good entrepreneur, and then there is in that second step is a lot of compliance and overseeing a lot of legal paperwork. So your ability to maneuver that with lawyers, etc., needs to be there, or at least you will definitely play some part in that process, right? So as an analyst, these 2 steps are what you do the most. As associate, senior associate, VP, you'll do the 3rd step and the 4th step. The 3rd step is what I call the portfolio management, meaning you participate, you constantly review the MISs, the monthly MISs of the companies. You get into at least like a monthly or, once in at least 2 months kind of a call with the entrepreneur to understand what the progress has been. See in whatever small ways you can help them, right? Whether it's hiring, references, making introductions with either suppliers, vendors, whatever it is, right? And the last part, which is generally done by VP and above, is exit, and the most important part of a VC fund, right? Because everything till that point is unrealized, what we call an unrealized IRR, right? So it's meaningless. It's just returns.
RBPIs.
Exactly, right? And so that's really how the value chain works.
So how many years typically? Again, I know in VC there's actually no rule book. That's what I've learned in VC space, right? I mean, everyone works on their own trajectory. But let's say if my dream is to be a fund manager, typically for a very smart individual, from analyst to a fund manager, that's a decade-long journey, maybe more, maybe less.
I would say average at least like 7 years, assuming you've already.
That's not bad.
Sorted.
7 years is not bad.
Yeah. So, and then partners also is caveated, right? Like you first, so there is what we call the carry pool. So you first start with just a few points on the carry pool, and then you become more like the managing partner of the GP. But
so carry pool, by the way, for those of you who do not know, you start sharing some of the profits you make on the deals. Right.
Correct.
My understanding is you create a pool at the firm level, and then people who are eligible have a piece of the pool. So typically you become a part of the carry pool after VP level?
Yes.
So let's say again, I know this is a tough one now, but 7 to 10 years of experience, you are sharing profits, reasonably successful fund. So for me, successful fund is if you've had 2 consecutive funds doing 20-25% CAGR, you've proved yourself, right? And then you have longevity in your business. So a fund like this, how much typically on an average a fund manager should expect to make?
You're recording this conversation, you're going to put me in trouble. But like, I think
I said average. You're definitely above average, so feel free to.
I would say a good fund, good VC fund will at least do like a 30%, realize kind of an error. At least a 30%. And again,
30%, okay.
It depends from stage to stage. So if it's an early stage fund, you tend to invest in a lot more companies because you are investing at the most riskiest point in a company, right? So then you diversify and you take more bets. And I've seen good early stage funds give returns in the range of 40 to 60% realized returns, right?
Wow.
As you go further in that series A, series B, series C, so more like later stage funds will probably give you in that 30 to 40% kind of good funds will give you that returns. Having said that, like in India, let me caveat this. It's one of the challenges people face is, or LPs or the limited partners, just to simplify this for the audience, are the investors who invest in the fund. Similar to how you as an investor invest in a mutual fund, it's no different. It's you invest in a VC fund as an investor, right? And there are, the only restriction is the ticket size, right? So unfortunately in India, very few VC fund managers so far have been like able to generate great
successful
returns, right?
Yeah.
So investing is, as we say, fundraising. Raising your first fund, like there's a joke in the VCs, is relatively easy, but then raising your second fund usually becomes difficult because you really have to demonstrate exits.
And you raise the first fund, you're sorted for at least next 7 years.
Yeah, but like I think it depends on how you structure your fees. Most of these will have a waterfall on the fees also, right? So very soon you'll realize that it's starting to pinch your wallet, and you'll have to generate exits. Otherwise, like you'll go out of pocket. It's important to sort of.
That was interesting, but my question was, if I'm a fund manager, okay, or if I'm a general partner, medium-sized fund, what kind of money I should take home? Me as an individual, what kind of money I should take home? Again, an average, because I know it varies drastically depending on the success of the fund and so many variables, but roughly, if you could break it down for us, fixed variable, because I'm sure a lot of people want to know this, and VC is such opaque and it's very difficult to figure out what's really happening.
Yeah, so honestly, like it's I wouldn't know a lot of fund manager salaries, to be honest. Like I would know the junior folk salaries because I sort of at some point try to hire them and I have to set some benchmark and I will research on that, right? So I have some at least benchmark or reference point there. But fund manager salary, is your question around fund manager salary specifically?
Yes. Yeah.
Honestly, like it'll really vary. It'll be anywhere from like the fixed part will be anywhere from 1 crore to 2.5 crores, 3 crores, right? So think about it this way. A typical fund manager, it's a 220 kind of a structure, right? So just to make it simple for the audience, if you raise 100 as the corpus, every year you get 2 as the fees to just manage that corpus of 100, right? And that fees generally, it's a waterfall, so it generally goes down with time, but every year you get 2, right? And the fund, as Utkarsh rightly said, it's roughly about a 5 to 7 year kind of a horizon of the fund, right, in terms of deployment. So let's say if it's a mid-size kind of a fund, then there are at least 2 or 3 fund managers or GPs, what we call general partners. Then that 2 is split between GPs, then between the team that you hire, etc. So if it's a smaller fund, then perhaps that like you depends on the size of the fund, but like you get to earn a little bit more. If it's a larger fund, then your fixed perhaps is fixed, but then you really kill it on the carry. Yeah.
So a mid-size fund, let's say, is about 100 mils. Is that a fair mid-size fund in India? 100 million USDs?
Mid-size fund, no, I would say little low. I would say 50 to 60 million.
So if I take 50 million, that's about 350 crores, right? So 350 crores.
350 to 500 crores is what I'll call.
So
mid-size.
let's say 400 crores. So 400 crores, 2% is about 8 crores. Correct. So that's the money you have to take care of all the GPs and the staff and the operations cost.
Office, right? So that's rent and all of those kind of things, right? Exactly.
So that gets split. So that gives us some estimate of what's happening.
Imagine in that 8 crore situation, if it's a 400 crore fund, at least there will be 2 GPs, or at least there'll be 2 partners, right? Or 2 fund managers. So there is no way that they'll be able to take 3 crores each, for example.
Absolutely,
right?
Yeah.
And I know of some mutual fund managers who make at least 3 crores fixed.
Yeah.
Right?
So, mutual fund makes more.
Makes more, right?
Yeah,
so
absolutely,
there's no way you can take that, because if you do that, then you're going to kill your company. You're just not going to have enough people to work for you. So the fixed is lower, but then on exits, like you make a lot of money.
Right. Okay. I think that's been very insightful. Okay. So I'll ask a couple of questions and then I'll start taking audience's questions. And we are already at 5:24. But I have a couple of questions of my own before I start taking audience. So my next question is, I remember, I think a few years ago, you walked into my Mumbai classroom and you're observing silently. I think you attended 1 or 2 classes. What made you get into CFA in the first place? And do you see any value of CFA helping in the VC world? And I want you to give me a really honest answer. Has that curriculum helped you? Do you see it being valuable in the overall VC ecosystem?
Okay, so what made me do or pursue CFA? I kind of just wanted to deepen my knowledge in finance. I was feeling like I was doing all the fancy stuff of a VC, but somewhere there was still feeling that void that it kind of felt incomplete, right? From just knowledge perspective. And hence it sort of made me take that step to walk into your office. In terms of it helping me in the VC setup, I would say very little direct sort of an impact, but I think for me, what CFA did was it changed the way I looked at an investment to some extent, at least, right? Like, and that perspective, while not directly, it's not like I learned one formula and I'm applying it in my job day-to-day basis, right? Or I learned one method of valuing a company that I'm applying here. But it's just the widening of knowledge and like, so for example, we saw in level 2, fixed income probability driven sort of thing, right? And I use that very, very confidently now. And it's not that I wasn't using it before studying that. I was always using a probability, like we always run scenarios that if the company does this, what's the probability of it getting to that point? And then what is the probability adjusted returns or probability adjusted outcomes, right? But after CFA, I felt like my approach to that exercise was much more knowledgeable, and I was much more confident about it.
So overall, we can say it helps you build some sort of a thinking framework, right? On a very broader 100%, level.
100%, and you'll always be most like. So again, I won't take the names, but like I was part of a recent board meeting, and couple of VCs they were talking about like cost of finance, and I'm like, please yaar mat baat karo, aap kya bol rahe ho, cost of finance? Like, like you don't coach this poor guy like on like cost of finance. I'll tell you what cost of finance is, but I'm just joking, right? Like a VC generally will not know those concepts. A typical VC, good funds, fund managers, granted, they're very intelligent and
they're more business guys.
But they're more business guys, right? But versus a CFA will actually be able to talk more intelligently about it.
Got it. Okay. And give us a rule book now. Okay. So give us some sort of a playbook. I'll start taking audience question, but so I told you the dream is to have a few fund managers out of the candidates who are listening today. Okay. So what should they start doing from tomorrow? Give us like in India, everyone loves a to-do list. So give us which courses, give us books, give us some sort of a how-to strategy about it.
Okay. So I think, let me start with books. One book that really helped me was this book called, I think it's called Venture Deals by Brad Feld.
Okay.
Right. I think it just dumps down the entire VC, how VCs think, and the whole legal paperwork and the whole rights and everything in a very, very digestible kind of a way.
Venture Deals.
Venture Deals. And I think there's a longish name, but it's called Venture Deals by Brad Feld. Brad Feld himself is like very, very well-known global, very successful venture capital fund manager. And he and one of his partners actually wrote this book. So that book is something I read very early in my career and kind of helped me build a strong perspective. In terms of other things that one should do to become fund manager, especially in the VC space, is start like building a point of view, right, about startups. Like you yourself today are surrounded. India's like really now got into this whole startup wave, right? So there are so many startups that you are surrounded by, right?
Yeah.
Whether you want to do ed tech, whether you want to do more consumer, whether you want to do more deep tech, that you already have access to so many startups, right? So
yes,
learn about them, read about them, right? Like there are so many publications now, VC Circle. There's so many entrepreneurial publication. ET does a great job of some of the coverage on startups. There is Ken, which does like very detailed analysis on startups.
Yeah.
Right. So start reading about it, and start building a perspective. Right. Like why would you invest? Like always ask yourself a question. So one of the things perhaps I missed out to say is, as a kid, like maybe college kid and all, my understanding of business models was very strong. So in those days, Google was just, I think, just around the time it was set up, and I could talk about the business model of Google, right? And I used to argue with my seniors or my professors about why this will do well and why this will not do well, right? So it's okay to be wrong. It's only when you make mistakes and it's only when you learn is when you are going to become a better investor, right? So start like building a point of view around, if you're eating Academia yogurt, like why is this a good company, right? And start estimating, let's say, what would be the revenue of this company, and how much will the revenue scale to, let's say, in 3 years down the line, 4 years down the line. Like start asking yourself, what are the next set of products that they should be launching, right? If this has to become a unicorn at some point, right? So unicorn, like if you apply a simple math, right? Unicorn is a company which is valued roughly at $1 billion, so 7,000 crores or 7,500 crores, right? And if you take a simple revenue multiple of 5x, that means you have to be what, like roughly about 1,500 crores in revenue, right?
Little less than that, yeah.
Little less than that. So at how will the company reach a 1,500 crore revenue is a question you need to ask yourself, right? If you want a stellar exit, that's really what you need to do, right? And the more you ask yourself those questions and try to answer those questions yourself is when, you'll really hone your skills about analyzing companies from a VC point of view.
Okay, to summarize, Venture Deals, build opinions, point of view. By the way, I started reading Ken because of you.
Yeah.
You remember you gifted me one article,
yes,
I'm obsessed with it. I read it as if it's a book. So I have these nights dedicated where I just read Ken. I do nothing else. It's fantastic. By the way, it's recommendation.
I'm wasting my membership. So.
Yeah. It's a great publication, by the way, Ken, Ken. If you're interested in startup ecosystem, I think Ken is Ken. It's a maybe we should get paid for endorsing them, but those guys deserve it. They're fantastic. Yes, the ken.com, right?
Yeah.
Okay. In terms of courses, CFA, just give me a yes or no. Do you think that's a value add? Someone who's very dedicated to VC.
I would say MBA or CFA, either of the two.
Fantastic. Okay. Financial modeling, like, do you think financial modeling skills are necessary?
Yes, they're definitely very necessary, not for early stage investing, but like if you want to invest in companies after Series A, financial modeling will become critical.
Right.
So yes, answer is yes.
Okay. There are these, a couple of people are asking Kaya. There's this, I don't know if you're aware of Kaya certification.
I have no idea.
Yeah, that's what I thought. Yeah, okay. So you you heard it. All right. So my questions are done. Let's take some of the audience's question. On the Q&A section, we have 54 questions. That will take us one entire year, but we'll take some of them in selectively.
I'm good on time, brother, so I can go on for like 15 minutes more.
Yeah, good. My next session is at 6, financial modeling. So we have 27 minutes. Let's try to do as many as we can. Okay, you know what? I received one question over email. So the gentleman was slightly harsh with the language. He said in many tier 2 and tier 3 towns, there is a startup scam happening where investors, where people are promising returns for investing in startups, and then people are investing money and they're losing money. I think he must be referring to the FFF round, right? Triple F. You know that term, right? So how should the retail investor protect themselves from these type of startup investments? I have an answer. I want to give that person an answer as well, but I want to hear it from you first.
I think I'm probably answering this question like you're probably the 10th person or through this email. It's the 10th time I'm answering this, and I'm glad that people are asking. I'm glad that you asked me this question, right? Because what my observation and my experience, not experience, but more like an observation of this FFF round, or what we call the angel network sort of investing, is that it's extremely, extremely risky, right? I think if and I'm going to give a very black and white kind of an answer, so bear with me, but like I would urge people not to do that. If you don't understand, if you don't personally know the entrepreneur, please don't do FFF rounds, right? FFF rounds means friends, family, and fools. Forget the fool part, but like friends, family, though, at least you should take it seriously. You have to invest in a friend or in a family member. You can't do FFF in a third person whom you don't know, right? So straight answer is please don't do it. I don't think India still has the ecosystem to do it in a very structured kind of a way, right? And because of certain restrictions around AIF and the minimum ticket investments in AIF, etc., that's not possible today in India. And it'll change. I think it's about time it'll change, and there'll be funds who will sort of take like micro VCs or crowdfunding, etc., that probably like allow you to give you that access to startup deals, but don't chase returns. I think you're safer off with like the reputed mutual funds, etc.
FOMO, right? Neighbors never invested in Paytm. Aaj to wo crorepati hai.
And it's exactly right. Like people say my friend invested and he made 20x on this, but I'm saying like you don't know the 30 other investments where he made 0. Right, and it's going to be a 1-0 outcome. There is no like areas of gray, right? So
that's true.
Please don't get attracted. Please be super careful. Unless and until you know the person, do not invest. And if you really feel compelled to invest, it should be something which you should be mentally prepared to completely make it 0.
Lose.
Basically.
Yeah. So here's what I tell people. So number one is, if you're like, I'll be a little blunt here, but if your net worth is less than 10 crores, I think anyways, I don't think VCP space is for you yet, right? So first, build your net worth to a level where you have that need to diversify and, maybe put some part of the portfolio in this space.
Yeah.
And individual investing, you need a lot of skill set.
Yeah.
I think if you want to do a private equity, there are funds available, which evaluating them by itself is a very big task. It's not easy. But individual investing is a completely different level. So in general, refrain from doing at least the full round. Maybe friends and family, if you have high conviction and you're willing to let go of that money.
Yeah.
Your brother is doing a startup, you don't have a choice. Then it's a different story. But otherwise, don't burn your cash. All right. Okay, let's take Shahir's question. Shahir, I'm answering your question now. I'm an Indian living in the Middle East, Qatar. I want to be a VC, but I'm in double mind if I should head to Canada for masters. By the way, this some place in Canada I've heard which is apparently very popular for private equity investing. Like most of the guys from KKR have studied there or something like that. I don't know if you've heard of it. And pursue a career in VC there, or head back home to India and struggle there. I'd love to get your opinion. So his question is, I'm in Middle East. Should I go to Canada and be a VC, or should I come to India and struggle?
Look, I can't comment on Canada's VC or general startup ecosystem in Canada, right? Like, I think action today is in India. So intuitive answer is like, if you want to do India VC or be a part of the India startup story, then you got to be in India as much as possible. Even if that means doing some sort of a part-time course or like full-time course in India, I think that will allow you to network and be closer to the ecosystem versus like staying in Canada, where again, time zone and all of that, even from a Zoom call perspective, is going to make it difficult for you.
Yeah. And Shahir, my answer to you, by the way, I'll tell you what, very interesting. So you go to some place in Bihar, maybe, okay, and talk to kids who are in maybe 11, 12 standard, and do a ratio. A big chunk of kids would probably say today that I would want to be an entrepreneur or want to do a startup. As against, it always used to be कि पापा चाहते हैं कि मैं IAS officer बनूं, right? It has always been the thing in India that parents wanted you to be a civil servant. That's changing, right? And I think this is going to change massively in the next 10, 15 years, where startup is going to be a thing. So if VC is a space that excites you, like if I were you, I would have probably chosen India over any other place in the world, maybe except for Silicon Valley.
Yeah, okay. Exactly. Yeah. I mean, through Canada, if you feel like you have access to the valley,
then maybe it's a different story.
Like, that's like very precious experience.
Yeah. Okay. This question I love, and maybe I want to ask this myself to you. Why do you prefer VCs over public equity? Why?
Look, I mean, for me, I started my career as an entrepreneur, right? So in general, my understanding of startups was much better than my understanding of larger companies, right? As an individual, I loved working in smaller teams, which generally you find in a startup, versus larger teams in MNCs, etc. Right? So hence my inclination from very early on, right from my like third year BCom, was towards startups. And hence, like when I learned about the VC concept, I was like, hey, this is awesome, right? Like, I don't have to read those boring annual reports, which usually have like flawed English and all of that, right? Like, this is something I understand, and I'll hopefully be able to do a better job of investing. For the record, I do some level of public investing also, but like, I think I'm better at like early stage investing. So I think it's just a personal choice. There is no like right or wrong answer, right? For me, I just understood startups better than I understood like larger companies, and I just found the whole process of evaluation of larger companies a little more tedious than startup. I think for me, startup evaluation process came more naturally to me.
So again, the answer is an individual
it's a
preference.
Subjective thing. Yeah.
Okay, this is a great question. Is MBA necessary to be successful in the VC space?
Successful, no. Entry, perhaps, yes.
And does it have to be IIMs?
Let me put it this way. If it's not top tier school, your path or your ability to enter is going to, like, you'll have to work a little harder to get it, right? So just to give you some context, I have friends from IMC, went to HBS, wanted to break into VC, still hasn't broken into VC, right? Extremely intelligent guy, right? Like 770 GMAT, 99.98 CAT, did well in IMC and did well in HBS also, right? Like, but still not able to break into VC. So it's not like you do an MBA from top tier school and you break into VC, right? So the corollary is that can you get into without an MBA? Answer is yes, but just you'll have to work a little harder than perhaps those guys have more access, unfortunately.
So MBAs will make your life easy, especially if you're in a top tier B school in India.
Relatively, yeah. Most fund managers also belong to these schools, right? So you can always get what we call information interviews. Just say that, hey, I want to just learn about how recruiting works at your firm. I am an alum from your school, or I went to the same school as you, like, or you meet them in like alumni events and all of that. Right? So your networking probability and like ability to be out there increase a little bit.
That's kind of unfortunate though, isn't it?
Very unfortunate.
It's very unfortunate.
So think about it this way, right? The guys who's the biggest contributor to the VC ecosystem? It's the endowment funds of these top schools globally, right? So, and what has happened is, unfortunately, like they only recognize the top tier schools in India, right? And and it's also like for the ones who didn't go to top tier schools also have to prove themselves, right? Like that you're good enough, right? And which has not happened. So I don't always blame them. I have been on the receiving end of it, so of course it's been a frustrating journey. But like I don't always blame them, because then they want, if you're giving even 100 rupees of your money to someone to manage, you want to give it to somebody who's more likely to succeed at generating returns on it, right? And that's how those guys will view it, right? When they have billions and billions of dollars, but they want to just give it to a person.
I agree with the thought process, right? If I have to deploy my money, I need the best guys to manage it. But the screening process, I think that's where the problem is, right? The problem is not that my intention of recruiting the best. I think the problem is I'm going to interview only if they have a particular stamp on their CVs.
Yeah, it's a bit unfortunate. I think there are ways to navigate that. As I said, like just work in startup, make an impact. Like there is no substitute to that, right? Like you build your network, like you get into an information interview and talk about 2-3 deals to people, right? Like people will notice you. They will. It's like versus like let's say top tier IM kid who doesn't even know like why he or she should invest in a company, right? Like so that will make a difference.
How do you decide the point of exit in a deal?
Look, there is no right or wrong answer, right? Like, the way I look at exits is perhaps not the way most fund managers look at exit. For me, I find startup investing to be very illiquid kind of a form of investing. And I find exits to be very, very difficult, right? So what I typically do is run some scenarios when an exit opportunity comes my way, or if I feel like large round is happening and my shareholding is quite small, I'll perhaps be able to convince the incoming investor to buy me out, right? Because for them it's just like 1%, 2% more of money there, or some part of the money that goes into buying my stake out, right? So I'll try to run scenarios, and as I said, right, like going back to the fundamentals, right? How big can this company become, and across what time frame? And I'll run some potential return analysis, like I run the sensitivity table, right, and see that, okay, if I stay in the company for this long and versus the company does this amount of revenue, what is the return that I earn, let's say, by not exiting at this particular moment and exiting at 5 years down the line, or 3 years down the line, or 2 years down the line, versus exiting now. And I try to like it's really like self-reflective kind of process, etc. Right? You say that that's very interesting. Yeah. Is this really the right time to exit? And that's really how I think through an exit scenario. So I did one exit recently, and it was a tough one. And many times your calls will go wrong, but it's okay, right? As long as you are able to make money. My exit was at 100% plus realized.
So about 2x.
Yeah, about 3x holding period, whatever, right? So I think. I think running some sensitivity and building some projection of how the company is going to be, and try to run scenarios and see. That's really the way to think about it.
So would you, it also got to do a little bit with your personality as well, right? And because especially in your case, you don't have the pressure of a 7-year horizon or a 5-year horizon. So you have the ability to stay longer if you want to.
Yes.
I think it's got to do a little bit with, so you look like a little more harvesting type of a guy where the harvest is ready. Let me just collect my harvest and maybe put it somewhere else.
Yeah. Also, it's got to do with the amount of investment you make, right? So if you are a large fund and you've deployed a lot of capital, like you will have to stay through till IPO or an exit event, which is more like an acquisition, right? So you have no choice. There is nobody will be able to buy you out, right? So sometimes the size of the check you write also has some constraint.
All right. Last question for the day, and then we're going to let you go. In the past, we've tried to pushed some people to you. We've sent you a few CVs. You've interviewed some of them, but we haven't had a success getting someone inside you. So do we still have that option open? What kind of CVs should we be sending you now?
So I'm right now actively involved. It was not relevant for this conversation, so I didn't talk about it, but I'm actively involved in a startup and we are hiring for a founder's office role. And this is a startup which is already doing like a 7-8 million in seed round of funding. So we're already in paperwork, etc. Right? So there is a founder's office opening. I think happy to look at that from a hiring perspective.
We're going to get lots of emails with that now. Location is Mumbai, right?
Location is Mumbai.
Fantastic. Okay.
I want to say one thing, I think this FFF, and I've seen so many of my friends lose money and it just hurts me, right? Like when people invest blindly, right? I think very important thing to understand about VC, and I should have touched upon this earlier, is so a guy like me will look at roughly in the range of 300 to 350 deals a year, right? And I'll end up investing in, on average, I'm trying to give you an average answer, not like the first year answer, but on average, I'll make about 5 investments in a year, max, right? Ideally 3 to 4, not more than that, right? On a higher side, I'll make 5 investments. An early stage fund, a reputed early stage fund will perhaps look at twice as many deals. So in the range of 600 to 700 deals, and they'll not invest in more than 6 to 8 companies, right? So just see the number of companies
1%.
they say, see the number of companies they say no to, right? And if you ever want to do VC investing or like FFF investing, then learn to say no first, right? Like say no to like 20 companies and then 11वीं company में देखेंगे आपको पैसा डालना है, right? Like that's very important to understand. Typically what happens is the guys who come for these angel round of investing are the ones who already been rejected by top tier VC funds. So the fact that as a retail investor, somebody is coming to you means there is a good chance that this person, fortunately or unfortunately, has already been rejected by the mainstream investors. So then why would you want to invest in that crop of entrepreneurs, right? So be super careful about this. So don't lose your money making blind bets.
That's going to save a lot of people a lot of money, including me. You've already saved me one. You remember I was almost about to write a check. You've saved me one deal already. So Jigar,
it's difficult conversation to have with my friends. Like they come in so strongly in a conversation saying that this is great and the business will become this, and I'm like, bhai nahi banega ye, yaar ye mat kar investment. But it's tough, I know, but like please be careful.
Thank you very much. That's what I want to say. I think we've got a lot of insights in the last 90 odd minutes. We definitely know we see much more better than what we started out with. So thank you very much.
My pleasure.
Wish you all the best for the exciting thing that you're doing these days, which unfortunately we couldn't talk much, and maybe we shouldn't at this stage. But very, very happy. Thank you very much. And we'll hopefully get an opportunity to learn from you again sometime soon.
My pleasure, anytime. Thank you once again for inviting me.
All right. Thank you then. Have a great one. Bye.
Take care. Bye.